Hey everyone, it's Eric Pelt here with Citywide Home Loans. Thanks for watching my quick Wednesday mortgage minute for November 28th. I actually tried to record this outside for you, but oh my gosh, it is so crazy windy out there. My hair is flying, my mic has all this wind noise, nothing, it didn't work. So here we are with this nice boring background. Again, we have a lot to talk about today, so I'm going to talk really fast. First of all, the FHFA increased all of its conventional loan limits for 2019, and let's review these. So the baseline conventional conforming loan limit for 2019 will be $484,350. That's for everywhere in the country, but then certain counties have super conforming loan limits. All the counties around the Denver metro area have a new super conforming loan limit of $561,200. Boulder County itself has a super conforming loan limit of $626,750. Okay, these are important numbers because when people have to cross over and get loan amounts higher than this, then they're in jumbo territory. And jumbo territory has some disadvantages like slightly higher rates, harder underwriting guidelines, those kinds of things. So another set of numbers here I want to talk about is what is the maximum loan to value for all of these. So for the conforming loan limit of $484,350, you can go up to 97% financing. That means you can do a $498,000 purchase price with 3% down. Wrap your head around that. Okay, for super conforming loan amounts, you can do 5% down. So for the $561,200, which is the super conforming loan limit for most of Denver, you can do a $590,000 purchase price with 5% down. And for Boulder County, you can do a $658,000 purchase price with 5% down. Okay, so keep that in mind as the FHFA increases these conforming and super conforming loan limits. Clients can buy more and more with still tiny little amounts of money down. Okay, second thing I want to talk to you about today, I learned something about from my credit repair people. If you have clients that have ever gone through this process where they get an authorized user account where they're added to somebody else's credit, or they've added somebody to their credit as an authorized user on their credit card, that person that gets added sort of instantly gets all of the wonderful credit history of the existing cardholders' payment data. What I didn't know about this was that this does not work with Amex cards. Don't ever have somebody added onto your Amex card as an authorized user, or have yourself added onto somebody else's Amex as an authorized user, because what happens with Amex is they reset all the data. All the wonderful payment history goes down to zero, and it starts rebuilding from there when an authorized user is added. So don't ever do that. It can actually lower your credit score. Third thing I want to talk to you about today, I was talking with a client about long closing terms, long closing periods, and talking about is this a good thing? Is this a bad thing? And I was reminded of a story a bunch of years ago. It might even be as many 10 years ago. I had a client who got under contract on a property with about a 75-day closing period. Okay, so 75 days out in the future, they were going to buy this new home. Okay, they liked this because it gave them lots of time to sell their old house. The seller liked it because they had a lot to clean up, I guess. But what didn't work out was my clients got under contract to sell their old place. They sold their old place, and then the seller of the new place died. Okay, the seller of the new place died unexpectedly, and the house fell into their estate. Nobody had the authorization to sign to sell the property, and my clients were effectively left homeless. They ended up, because they'd sold their old place and they had to be out by a certain date, they had to move into a residence inn. It was like a family of 5 living in a residence inn for 6 weeks or something like that. They got another house. They actually said that they liked the new house even a little better than the one they were under contract on. But can you imagine how disruptive that would be? So long closing periods do have some disadvantages. Most of the time, it's just better to get the thing done. Even if you rent back to the seller for 60 days, it's better to be a landlord in some situations than risk not getting the house at all. And there are other situations where you could just not get the house at all. It doesn't have to be some seller dying. So I know I talked really fast. I'm at the 4-minute mark, which is kind of a longer video for me. But thanks for listening. And I have anybody who got to this point in the video, thank you, congratulations. I have a giant gift bag full of every single piece of Citywide swag I'm going to put in this bag. And if you email me the word Amex, I will deliver this bag to you in the next week. So thanks for watching. Have a great week. Thanks. Bye.